you loving kind of the market environment right now, and how are you thinking about the new year?
Yeah, so if I go back and think about this year, and we were at the beginning, you think about all the wild things that happened. We went through the new administration, liberation. People forget that the US military was engaged in a war back in the spring. The one big beautiful bill in negotiations, the long government shutdown, these mega AI deals that happened over the course of the year. And what happened? Kind of what everyone thought would happen. Policy rates are a little bit lower, risk assets are higher, but it was very nonlinear. And so if I think about 26, I think it's probably going to feel somewhat similar. There's going to be weeks, maybe months, that don't feel that warm and fuzzy, but pretty strong backdrop. You have the stimulus coming from the one big beautiful bill.
Will that be inflationary, though, and cause some problems perhaps for the Fed and the next Fed chair, whoever that may be, he or she?
So, I mean, look, we're talking a lot about the inflation data today and questions around it. Obviously, the headline was softer, but markets are not reacting, believing that the underbelly of that data is as clean as it could be from a hangover from the shutdown. I'm not convinced that it's going to be super inflationary. It could be a little... It could put a little pressure against it, and I think, but if you look at where policy rates have been trading for the end of 2026, no matter what we've talked about, all those things that happened, all the questions about all these different Fed people, they've been right between 290 and 310. And so the market kind of has this credibility around where it's heading, no matter all these kind of balls that are thrown at it.
Well, I wanted to just talk about the Fed a little bit because the president did say he's speaking to 3 or 4 different candidates. If you look at Polymarket, for example, the money's still on Kevin Hassett, but Kevin Warsh is a close second favorite. Christopher Waller's on there too. Michelle Bowman, who he mentioned, is still only at 1% at this point. Does it matter to you, of those 4, who gets picked?
Yeah, so we've had a lot of names. I think there were 5, then there were 1, now there's 4. Back to my point, markets seem to be anchored at a certain point, no matter where the winds swing on these choices. What I would say is we're still talking about a committee. We're still talking about consensus on a committee. If you look at the dots that come, it looks like a scatter plot. There's a lot of work to do to bring people together. So while I think that it does matter ultimately over a long period of time, obviously who the chair is, if we're talking about the near term, this is about building consensus, getting the views, and quite frankly, this is a tricky environment. You know, Carol, you raised the underbelly of inflation.
Yeah.
We have the labor market that's a little weak. These are tricky times for both the Fed and global central banks, quite frankly.
All right, so you guys have whittled it down to 6 for 26.
Well, we tried.
Was it hard whittling it down to 6?
Yeah, look, I mean, we tried to catch the big themes that are out there, right?
Yeah.
You know, obviously central bank, obviously the dollar, obviously AI. We try to capture all those different things.
Let's go through a couple. Can the global economy maintain its delicate balance through 2026? And you just talked about forces balancing toward growth acceleration, and I guess those that might not be towards that.
Yeah, look, it's fragile. This is what we're talking about. I mean, we think that it can maintain our conviction when we went through and did the work to put that out, as we think that the tailwinds continue to outweigh the headwinds, but there's some fragility.
Yeah.
The labor report showed you that it's kind of not every sector with strength. Obviously, the questions about the inflation data, where things are happening. You know, we think it does have the support behind, but it's more a closer call than not.
Jason, we're going to jump around a little bit in the report.
Please.
The question that you have posed, I think a lot of people have right now when they look at the U.S. equity market. Are U.S. equities overvalued? Yes or no?
Yeah, I mean, obviously, this is you know, everyone's question.
Are some overvalued?
And what I would say is there's always some that are overvalued and there's always some that are undervalued.
But are there some more right now than usual that are overvalued?
Yeah, look, there's a lot of price for perfection in the market in certain sectors, right? That being said, we are getting some stimulus that's coming into the market next year. We do have easier, not tighter monetary policy on the horizon. We do have fiscal stimulus, corporate tax benefits that are there. I think a lot of it's in the price, but we think there continue to be a little support on risk assets here into next year for sure.
Jason, what do you do? Who do you talk to? What is the research that you guys look at to figure out whether the AI trade, the AI spend, the AI build out is getting frothy? Is it just a case of looking at valuations, or who do you talk to kind of get an idea?
So you can't just look at valuations. These are new technologies and new horizons where on some level the raw valuation doesn't really matter as much as what are the fundamentals? What's the forward of the different projects? what partnerships. You're seeing all these partnerships come out. So there's a whole series of strategic alliances that are going to be developed over time.
Are you comfortable, though, with the circular financing and complicated relationships and kind of cozy relationships?
Yeah, look,
it feels
I'm a bond guy, so I'm always a little nervous. That's how it works.
Hence, so are those folks when they look at Oracle, right, and what's going on in their balance sheet.
Yeah, I think what you're seeing across the horizon is that we're starting to sift through and think about who some possible winners and losers are, but this is a long game. If I think about back in the spring, people were questioning Google. What's going to happen to search? What's going to happen in that ecosystem? Now people see Google as, maybe the biggest winner. So these things can change very, very, very quickly. And I think that we're early enough, and we have a little chart that shows how early we are kind of in the journey here. And that's what I think it's important for folks to remember. We're early days in whatever this AI adventure will be. It's not going to be all highs or all lows, but there's going to be some sorting that goes through.
What's the risk? The main risk for 2026? What gets the train off the rails?
Yeah, look, like I said, there's a lot of fragility. I think obviously for the Fed and for policy here in the U.S. is clearly the labor market. You're seeing a lot of unevenness across the labor market. Growth is strong, but probably slightly below potential. So is there a point where taking folks out of the labor market brings growth down and that starts to fall further below potential? And then, look, we've had rate cuts last fall. We've had rate cuts this fall, and we still have 10 years that won't get off 4%.
Yeah, exactly.
And so, to me, that's something that has to manifest itself through the economy still as well.
Yeah, it's so funny because we had dipped below for a moment, it felt like, and then we had some guests maybe even talking about moving, closer to 3, and yet here we are at 4.1, and we're sitting there for a while.
Yeah, it's pretty stubborn there.
Well, you said, you're a bond guy, so one of the things that you guys are talking about, the 6 essential questions for investors, how are diverging rate paths shaping fixed income in the U.S., Europe, and emerging markets? And this is on a day where the BOE and ECB reined in with rates. We get a decision from the Bank of Japan tomorrow. We had the Fed recently. There are diverging policies among some central banks.
And Carol, I would say beyond diverging policies, the agreement is not there. The Bank of England had a 5-4 vote, very tight. As I said, look at the dots, it's all over. The ECB, listen to what they're saying. It's not everyone is student body right, student body left at all these different central banks. So not only do you have different speeds across these, but you also have inside, there's still some sorting that happens. So when you ask about the risks and the things, you can see the confusion in the market, and even from the experts who make these decisions.